Today, we're diving into a topic that's on everyone's lips. Are we on the brink of an economic meltdown?
Absolutely. Insights from figures like Jeff Snider will show us just how severe this situation has become.
And don't miss Cory Klippsten's views on Bitcoin's radical changes this year. Welcome to Financial Insights in Minutes, where we deliver crucial financial knowledge fast.
Why trust this summary? Our insights are curated from top-tier economic analyses powered by advanced AI technology. Exactly. We distill expert opinions into digestible insights you can act on without wasting time.
Stay tuned as we explore how rising living costs are outpacing your investments. Let's dive right into today's topic. The economic landscape seems to be melting down like ice cream on a hot day.
Absolutely. Jeff Snider is dissecting the turmoil in the U.S. Treasury market and the crashing commodities. What exactly does this mean for the economy?
So what's the core thesis Jeff presents?
The essence is clear. The data shows that the economy is not just feeling like it's in a recession, it's heading straight into one. The traditional explanations simply don't cut it anymore.
Let's talk about the trends in the U.S. Treasury market. What does it reveal?
The drop in the two-year Treasury yield to just 3.67% signifies growing fears about the economy. This isn't just a blip, it's a stark warning.
Now, let's navigate the rocky waters of the commodity markets.
Right, oil prices are crashing and gasoline is following suit, hitting lows we haven't seen in over 2 years. It's a grim landscape.
How's the labor market reacting amid all this chaos?
The latest payroll reports seem optimistic, but revisions show a stark reality. Full-time jobs are converting to part-time, indicating underlying weakness.
What does Jeff predict for the economy going forward?
The predictions aren't promising. There's an expectation for continued economic contraction, especially in consumer demand as these trends play out.
Wrapping it all up, what should we take away from this?
The key takeaway is that all indicators are converging towards a recession. Every signal, from bond yields to labor trends, paints a clear picture of trouble ahead.
Before we finish up, what do you think the policymakers will do next?
Feel free to share your thoughts in the comments. Your insights could shape our understanding of the evolving economic landscape.
Tensions are high, and the stakes are higher in today's ultimate showdown, Bitcoin versus gold. How will these two heavyweights debate the future of currency?
That's right. With insights from Peter Schiff and Jack Mallers, both experts in their fields, we're going to unpack the future of finance and see which asset really stands the test of time.
So what's at stake here? The thesis revolves around whether Bitcoin can hold up against gold as the ultimate safeguard for investments in volatile times.
Absolutely. Experts are divided, with Schiff arguing that gold's historical reliability outweighs Bitcoin's speculative nature, and Mallers touting Bitcoin's technological advantages in modern finance.
What do these inflation concerns mean for our debate?
Schiff predicts inflation will worsen, with potentially devastating impacts on the dollar. He views Bitcoin as a risky investment that could fail when it is needed most.
How does gold hold up in this economic climate?
Gold's historical track record as a reliable store of value is hard to ignore. Central banks are increasing their gold reserves, reflecting its ongoing importance.
Now, what about Bitcoin's unique tech?
Mallers highlights that Bitcoin offers features like decentralization and a capped supply, attributes that could give it an edge over traditional currencies.
How do the market performances stack up?
Historically, Bitcoin has shown remarkable price growth, oftentimes outperforming gold. Yet, its volatility poses challenges for those seeking stability.
What about Bitcoin's acceptance on a national scale?
El Salvador's move to adopt Bitcoin as legal tender is historic, but will other nations follow suit? That remains a key question in this debate.
Looking ahead, what's the crystal ball saying about Bitcoin?
Market momentum could propel Bitcoin even further into mainstream finance, reshaping monetary policies worldwide. But regulatory hurdles pose serious risks.
And what about gold? Will it maintain its appeal?
Absolutely. Gold's credibility as a hedge against inflation might attract more investors, maintaining its status as a safe haven.
As we wrap up, what's the bottom line from this epic showdown?
Both Bitcoin and gold present unique advantages and risks. It's crucial for investors to evaluate their own priorities before diving in.
Final thoughts. What's your investing strategy based on today's discussion?
That's the golden question. Share your thoughts in the comments. It's vital to decipher which asset suits your financial future.
A thrilling year for Bitcoin unfolds as Cory Klippsten breaks down major events and their implications for the cryptocurrency market.
Indeed, with spot Bitcoin ETFs taking center stage and Bitcoin reaching new heights, it's clear we're witnessing a pivotal moment in finance.
What's the main thesis driving Cory's insights on Bitcoin this year?
Cory emphasizes that heightened political interest and institutional adoption have driven Bitcoin's recent surge, making 2024 a historic year for the cryptocurrency.
First up are the spot Bitcoin ETFs. What's their significance?
The ETFs launched in January now boast over $48 billion. They've drawn major institutional players, validating Bitcoin's status in the financial landscape.
Now, let's discuss the political dynamics. How is that shaping Bitcoin's landscape?
Bitcoin has become a hot political issue, with Trump suggesting it could become a reserve asset, reflecting a larger trend of political engagement in Bitcoin discussions.
What about Cory's price predictions? What can we expect?
Cory anticipates Bitcoin could reach $75,000 by the end of 2024, potentially hitting $1 million by 2030, contingent on market dynamics.
As we gaze into the crystal ball, what are Cory's predictions for institutional adoption?
Cory foresees a significant uptick in institutional participation, predicting more pension funds and corporations will add Bitcoin to their portfolios.
What about price volatility trends?
Cory expects continued volatility will shape Bitcoin's market trend, which is likely to attract speculative investments, causing both dips and surges.
To wrap things up, what should viewers take away from Cory's insights?
The overall message is clear. Bitcoin's trajectory is set for growth and increased legitimacy. However, investors should remain aware of the inherent risks and volatility present in this innovative market.
Lastly, how does the Bitcoin versus gold debate play out in Cory's perspective?
Cory suggests that while gold has stood the test of time, Bitcoin's potential for substantial returns makes it a compelling offer for the future, indicating a shift in how we perceive value.
As we conclude this roller coaster ride through Bitcoin's insights, what are your predictions for the future?
Join the conversation and let us know your thoughts in the comments below. Your insight might shape the next big discussion around Bitcoin.
Let's dive right in. Today's topic is pressing. Can your wealth keep up with the rising cost of living? Joining us are financial experts from New Harbor Financial, John Lara and Mike Preston, ready to break down what's brewing in the markets.
That's right. Many viewers are expressing concerns about the escalating cost of essentials compared to their investment returns. Today, we'll dissect these trends while arming you with strategies to protect your wealth.
So what's at the heart of today's discussion?
The core thesis revolves around the alarming trend. Many are witnessing their living costs surge, far outpacing their portfolio growth. The pressing question is, how do we strategize to combat this alarming gap?
Let's dissect some key market trends. What are the numbers telling us?
Recent reports show jobless claims are rising. This trend indicates weakening in the labor market, which can ultimately affect economic stability. Coupled with high market valuations, it creates an unpredictable environment for investors.
And what about everyday costs? What's happening at the consumer level?
The cost of essentials, like groceries and homeowners insurance, is surging. Many families are experiencing annual increases in the realm of 30% or more. This creates the unsettling feeling that their wealth is evaporating despite nominal investment gains.
Now onto the Fed's interest rate strategies. How might these influence consumer and investor sentiment?
The Fed is expected to announce rate cuts soon, aiming to stimulate the economy. However, investors remain cautious, speculating that these cuts may not necessarily lead to economic improvement.
What predictions are being made regarding unemployment?
There's a strong possibility that we could see rising unemployment. If layoffs increase, consumer confidence may dwindle, posing more serious threats to the economy's health.
Looking ahead, what do experts predict about inflation?
Inflation could remain a persistent issue, leading to further pressure on households. This reality stresses the need for robust financial planning.
Wrapping it all up, what are the key takeaways for our viewers?
It's crucial for individuals to proactively manage their finances and stay informed about ongoing market changes. Regular reviews and strategic adjustments to investments can help preserve wealth.
Any final thoughts, particularly regarding seeking help?
Absolutely. Engaging with a knowledgeable financial advisor can lead to tailored investment strategies that align with individual goals and current economic realities. It's not just about surviving, but thriving.
As we wrap up, let's hear your strategies. How do you intend to safeguard your financial future?
We encourage you to share in the comments. It's all about learning from each other and adapting our strategies to secure our financial well-being.
Let's dive right into this week's insightful summary from Trade Brigade. Markets are crashing through key support levels in the Nasdaq, and with mixed labor data from Friday, volatility is expected to rise.
Here's the scoop. What we're really dealing with now is a broad-based market weakening. Our fearless trader Matt breaks it all down today, giving us some much-needed perspectives on upcoming inflation reports as well.
What's the crux of the situation here?
The main thesis is clear. With market performance inching downward, particularly in the Nasdaq, strict bear control is highlighted. Matt suggests that unless a significant shift occurs, we could be headed for more turbulence.
Can you elaborate on those critical market breakdowns?
Absolutely. The recent dips in both the Nasdaq and S&P are alarming. The Nasdaq's key support is crumbling like a sandcastle. We must keep an eye on inflation data.
What does the technical analysis tell us?
Tech-wise, indicators display bearish structures with low buyer interest. If this trend continues, new lower lows could be in store.
What should we watch regarding earnings?
Watch closely for earnings revisions. There's still optimism in the tech sector, despite expected downturns in energy and retail.
Any predictions for the coming weeks?
Investors should definitely brace for continuing volatility. The market is at a tipping point. Upcoming inflation reports may be the pivotal factors.
What about the potential for bearish trends?
There's a real chance bearish trends will take hold in the weeks to come. It's crucial to evaluate risk levels with any trades.
So as we wrap up, what are the key takeaways?
Ultimately, navigating this turbulent market requires keen attention. Traders must adapt their strategies based on the developing dynamics, especially with inflation looming.
What strategies should traders be considering?
Pay attention to the upcoming economic reports. This context will be critical for determining market strategies in the near future. Don't forget to join us for more updates.
What a revealing discussion we've had today about the future of our financial landscape.
Right? Jeff Snider's insights on Treasury market trends certainly raised eyebrows about a possible recession.
And the debate between Peter Schiff advocating for gold stability and Jack Mallers praising Bitcoin's rise is so fascinating.
Absolutely. Both Cory Klippsten and Mike Preston see potential in Bitcoin despite the risks, which is a bold stance.
It's crucial for viewers to consider these expert opinions as they navigate their financial decisions.
If you found this discussion valuable, please like and subscribe to our channel to keep up with insights like these.
We're here to make sense of the complexities in finance for you. Don't miss out on future episodes.
Thanks for joining us today, and be sure to check out our other videos for more financial enlightenment.